Listen up, because we're talking about a household name in hot water: Walgreens. This isn't just another story about a company facing a few bumps in the road. No, this is a full-blown crisis that has everyone from Wall Street to Main Street buzzing. The drugstore giant is in a slump, and not the kind you cure with an over-the-counter remedy. Empty aisles and dwindling customer numbers paint a grim picture. It's a stark contrast to the bustling stores we once knew. Their stock, ticker symbol WBA, has been lagging, and the company is looking for a lifeline. Investors are growing increasingly anxious as they watch the stock's steady decline. The once reliable investment now seems fraught with uncertainty. Enter Sycamore Partners, a private equity firm known for shaking things up in the retail world. With a reputation for turning around struggling businesses, Sycamore sees an opportunity where others see a sinking ship. They're in talks to buy Walgreens, a move that could reshape the entire pharmacy landscape. This potential acquisition isn't just about saving a failing business, it's about redefining the future of retail pharmacies. The big question on everyone's mind: is this a desperate move by a struggling company, or a shrewd play by Sycamore to snatch up a bargain? Analysts are divided, with some seeing it as a masterstroke and others as a risky gamble. We're diving deep into this potential deal, examining what went wrong for Walgreens, Sycamore's track record, and the potential fallout for investors and consumers alike. We'll look at past acquisitions by Sycamore and how they fared, and what this could mean for the average Walgreens shopper. Fasten your seatbelts, because this is one roller coaster you won't want to miss. From financial highs and lows to the impact on your local pharmacy, we're covering it all. Stay tuned as we unravel the complexities of this high-stakes drama. Walgreens isn't just facing a little sniffle, it's a full-blown case of the financial flu. The company, once a staple in the American retail landscape, is now grappling with a myriad of issues that threaten its very existence. Their profits are down, their stores are struggling, and the competition is breathing down their necks. Foot traffic has significantly decreased, and the once bustling aisles are now eerily quiet. Competitors like CVS and Rite Aid are not just catching up. In many ways, they are surpassing Walgreens. What went wrong? It's a cocktail of challenges. The company is facing internal mismanagement, external market pressures, and a rapidly changing retail environment. Executives are scrambling to find solutions, but the problems are deeply rooted and multifaceted. First, the rise of online giants like Amazon has been eating away at their market share. The convenience of online shopping has drastically changed consumer behavior. People prefer the ease of clicking a button over the hassle of driving to a store. Why wait in line for toothpaste when you can order it from your couch? This shift has been particularly damaging for Walgreens, which has been slow to adapt to the digital age. Their online presence is weak compared to the robust platforms of their competitors. Second, the pharmacy benefit management (PBM) industry is squeezing their margins on prescription drugs. These middlemen have a significant influence on drug prices, and their negotiations often leave pharmacies like Walgreens with razor-thin margins. These middlemen negotiate lower prices from drug manufacturers, leaving less profit for pharmacies like Walgreens. The financial strain is palpable, and it's becoming increasingly difficult for the company to maintain its profitability. It's like trying to sell lemonade when your neighbor is giving it away for free. The competitive landscape is brutal, and Walgreens is finding it hard to keep up. Finally, Walgreens has struggled to adapt to changing consumer habits. The modern consumer demands convenience, speed, and a seamless shopping experience, both online and offline. Unfortunately, Walgreens has been slow to innovate in these areas. They haven't been as aggressive as their competitors in offering online ordering, in-store clinics, and other services that customers are demanding. While competitors are rolling out new features and services, Walgreens is lagging behind, struggling to catch up in a fast-paced market. Now let's talk about the potential buyer: Sycamore Partners. These guys are the heavy hitters of the private equity world, known for swooping in on struggling retailers and trying to turn them around. They've got a mixed track record, with some successes and some high-profile flops. On the plus side, they've had wins with companies like Staples and The Limited, taking them private, streamlining operations, and boosting profitability. However, they've also been criticized for their aggressive cost-cutting measures, which often involve layoffs and store closures. Think of them as the surgeons of the retail world. They're not afraid to make tough cuts, but sometimes the patient doesn't survive the operation. So, why is Walgreens even considering selling to a firm known for its ruthless efficiency? It's simple desperation. They're facing mounting debt, declining profits, and a rapidly changing retail landscape. They need a major shakeup, and they need it fast. Selling to Sycamore could give them the cash infusion they need to restructure, pay down debt, and invest in new initiatives. Of course, selling to a private equity firm comes with its own risks. Sycamore will be looking for a return on their investment, which could mean even more cost-cutting and job losses. Section 5. WBA stock. What happens next? Now let's get to the part you've all been waiting for, the impact on WBA stock. The recent buzz around Walgreens Boots Alliance has created quite a stir in the financial markets. Investors are on edge, eagerly watching every move. The news of a potential sale has already sent the stock price up, as investors bet on a buyout premium. But hold your horses. This initial surge is just the beginning of what could be a roller coaster ride. This is a highly uncertain situation. The market is reacting to speculation, and speculation can be a double-edged sword. While some investors are optimistic, others are cautious, waiting for more concrete information. If the deal goes through, WBA shareholders will likely receive a premium over the current market price. This could mean significant gains for those holding on to their shares. But remember, nothing is set in stone yet. However, if the deal falls apart, the stock could plummet back to earth. My advice? Be prepared for volatility. The market can be unpredictable, and it's essential to stay informed and ready for any outcome. Don't get caught up in the hype. It's easy to get swept away by the excitement, but it's crucial to remain level-headed. Consult with financial advisors and make decisions based on thorough research and analysis. This is a speculative play, and there's a lot that could happen between now and a potential deal closing. Keep an eye on the news, stay updated with market trends, and most importantly, make informed decisions. The future of WBA stock is uncertain, but with careful planning, you can navigate these turbulent waters. Section 6. Pharmacy Shakeup, the bigger picture. This potential deal isn't just about Walgreens. It's a symptom of a much larger trend in the retail pharmacy industry. Traditional drugstores are facing an existential crisis. They're being squeezed from all sides by online retailers, rising drug prices, and changing consumer expectations. This deal, if it goes through, could set off a wave of consolidation in the industry. We could see more mergers, acquisitions, and even bankruptcies as pharmacies struggle to adapt. Section 7. The future of Walgreens, a fork in the road. So what does the future hold for Walgreens? If Sycamore takes over, expect big changes. They'll likely close underperforming stores, lay off employees, and try to squeeze more profit out of the remaining locations. They might also invest in e-commerce, in-store clinics, and other services to compete with the likes of Amazon and CVS. The big question is whether these changes will be enough to save Walgreens in the long run. They're facing an uphill battle, and there's no guarantee that Sycamore's playbook will work in the rapidly evolving pharmacy landscape. Section 8. Conclusion. A new prescription for success. The potential sale of Walgreens to Sycamore Partners is a major development in the retail pharmacy industry. It's a sign of the times, as traditional drugstores struggle to keep up with the changing times. Whether this deal will be a success or a failure remains to be seen. One thing's for sure, the pharmacy landscape is undergoing a major transformation, and only the most innovative and adaptable